What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money, investing in fractional real estate online, as usual. I was excited today to see in my inbox a new launch from Mogul. It is a pad split style property in Decatur, Georgia. They're just saying Atlanta because it's the Atlanta market. See, this is another one of their VIP launches where they're putting this out, sending this out to, some of their investors early. I did put a link in our Discord to this. If you're not a member there, it doesn't cost anything. You just go to the description of this video. There's an invite to join our Discord. It's just a group of us that are talking about investing in fractional real estate across several different platforms. In the description as well to this video, you'll see links to all the places that I currently invest on. As far as for fractional real estate, just because I do doesn't mean that you should. Do your own due diligence on the platforms and the properties itself. Today, I'm going to dig into this one a little bit, share the info that I have. It is one of their basically early launch, so their analysis tab isn't up yet. There aren't any. I didn't see any documents when I looked earlier. Although I'll look again. Maybe they'll be there now. We're kind of in a little bit of a pickle on these ones. They did sell out some of their other smaller deals. They're only trying to raise 170,000. I'll show you in a minute how much they've raised. We'll get to that page. Some of their others sold out real quick and people missed them. It's not the end of the world because obviously they keep bringing deals. But at a certain point, you might end up in a spot where you just have to either trust that they're getting a deal that you like and that their initial impression is right. I would never say buy any of these without doing some due diligence of your own. But I'm finding that I'm in a spot where more and more I think they are putting out good deals, and I'm willing to jump into some of these kind of early, based on their initial look. Really, with just the assumption that they're going to do the right thing if they run into problems down the road in due diligence or or whatnot. And for now, all the properties that I've bought so far that have started operating are operating, better than I expected. But let's talk a little bit about this one. What they've given us, it's already operating as a pad split. It has been for 15 months where they verified it, with an NOI yield exceeding 10%. They're saying in their underwriting, they're assuming, pre-fees, 50K in revenue, which is less than what the post fee revenue was for the prior owner. So they seem to be being very very conservative with that estimate. And if you see, so these are some of the other properties they already put out. I own a piece of the Buffet. I own a piece of the Rhodes. I didn't buy any of the Prince. All of them are operating at a higher cash on cash level than what they projected so far. I mean, some of these only have 1 month of run rate. Some of them have a couple. I think the Rhodes has 2 or 3. But in general, it does appear that they're being pretty conservative the way they're underwriting deals. Until something happens to make me change my mind about that. If they tell me, our year one is going to be at 10.2%, that's free growth. I feel pretty good that that's, barring some catastrophe, it's going to hit that. Now, obviously, if you're new to the platform, you're going to want to spend some time digging into it. Decide if you agree with that, or you could think it's wrong, right? I mean, I can't tell the future. I can only see what I've seen from them so far. And that is what it is, right? So you're just going to have to decide. I mentioned it the last time I talked about one of their videos. I hate this average yield number. I tend to just completely ignore this. Their levered IRR, I'm fairly certain that to get to this that they're using a cash out refinance. Like I said, their analysis tab isn't available yet, so we can't be certain about that. But they've done that pretty consistently. So you have to decide, is that an assumption that you're comfortable with? So far, it has been for me. But even if not, because they're really high yields, I'm not terribly concerned with the lower IRRs, especially because I do believe that their yield will continue to grow as the property continues to perform. And if for some reason they're not able to, do a cash out refinance, they do have debt locked in. I believe they're using 30-year term loans on all of these. But so let's dig into this property a little bit more. The actual listing. So, and you can see, I mean, they've already raised 81,000. Earlier this afternoon, this was at 50. So this wasn't as if, it's not as if like someone had just like committed that whole lump sum up front. So, the raise is almost halfway done. This isn't even really live on their properties tab. It's only people that have this, that got the link early. Um, yeah, so that's, it's interesting to see how quickly some of these smaller ones sell out, and what I think it is not necessarily that this is such a better deal than like the Johnson or the Johnson 2, which I think neither of those have sold out yet. But I think it's because it is a much smaller amount of capital, and I think there's probably a lot of people like me. Oh no, okay, fix that tab. There's probably a lot of people like me that have that are buying a little bit of every single one, and so if they just need to raise, or not every single one, but a little bit of a lot of them, and if they have to raise a ton of money, there's not. I think that's why some of them start to slow down after a little while. Although, if you watch my video on the Johnson 2, I decided not to invest in that one at their current valuation. I do want to scroll down and see. They do have the operating agreement and the purchase agreement. I don't. Maybe I just missed this, but I didn't notice this um, earlier when I was on here. Uh, so no inspection yet or anything like that, and I don't, no appraisal, and I haven't seen those on any of them before they actually sold out any of the ones that I bought. I think they uploaded them on some of them after the fact. They do put appraisal contingencies though, so I don't believe they're going to ever pay above the appraised value, at least not by any significant amount. Sometimes when I've bought stuff, if an appraisal comes in a little bit low, um, I don't think it's the end of the world to pay a tiny bit above that. Um, One of the things I want to talk about a few things here. So, this purchase price 315,000. I'm going to show you what the third party websites think about that, but raising a total of 170K. There's the reserves and closing costs, but then you also have the Mogul platform fee. This is that 5% fee that they charge on every deal. One of the things somebody's brought up to me, whenever I'm on Lofty, I complain about I don't want to buy the properties. I don't like how a lot of the people bringing the property to the platform um, are, increasing the price by the 5% that Lofty allows. You hear me complain a lot about that, but I don't necessarily complain about it. There's a 5% fee on this. One of the things on Lofty, you get that 5% bump in value, but then you also get the transaction fees on those deals. So it's you're paying fees twice on there. You're paying that increased valuation and then fees. So that's part of the reason that I'm not as concerned with this. The other is I think that they're picking fantastic, properties. They're in markets that I expect to perform well, and so as far as from an appreciation perspective, um, which is the other. I mean, I think at a certain point, you're just going to have to, you just end up having to pay more to have this really passive experience and to have, experienced professionals picking properties for you. And I think they're, if I were going to go out and buy a property like this, they're getting a lot of these deals off market. I'm actually not certain if this one was or not. They probably mentioned it and I just didn't even, um, yeah, no, it's another one that they've purchased off market. And so it's not as, if I just wanted to buy a property like this, I could spend the time and go out and find these deals off market. But more likely than not, I'm going to buy a vacant property and have to get it up and running and operating in this manner. And in order to do that, it's going to take me some, that first year, it's going to cost me more than 5% probably in vacancy and um, furnishings and reconfiguring the property and all that stuff. I'm willing to give up on that a little bit in order, for this total package of a deal. Some of the deals they've actually negotiated what I think are amazing prices. Some of them have been not so much, and that's why I've passed on some of them. Um, this one I think is right in the middle. I'm going to go ahead and show you. My homes.com tab broke, and obviously, you want to really dig into what are the comps on here I went through in one of the videos. I think it was on the first. I think it was on the Mafee. I did a second video about it where I really dug into, how to pull comps and how to really look at different properties on this. But looking at the range here, we're towards the top of the range at 315, but we're well within it. Um, looking at this is what am I on? Realtor? Yeah, Realtor thinks it's right at just under 315. So okay, pretty close to their value. And then Zillow 37, puts a 317 value on it. When I see all the third party sites so close together like that, it makes me feel really good about it. And I know they have an appraisal contingency. Um, it's tough to worry too much about the valuation, other than altogether are they going to be able to overcome their fees and produce a good return. Um, the other reason that I'm much more comfortable being basically, upside down on my value here initially, right? Because I paid additional fees, is because they're able to create really great. There's a couple reasons, right? The big thing, remember rule number one: don't lose money. And having that, where we've put more into it than the current market value. That's the reason I dislike that so much is you're at a risk of losing money. But you have to remember the second part of that is you have to be upside down like that and be a forced seller. And I think on this platform, and this is just my prediction, but I think you're much less likely to be a forced seller here than on a lot of the ones that I complain about when you see them on Lofty, where I think you're paying too much, and there's other issues as far as like the way the debt's structured and that sort of thing. So when we have relatively conservative debt, we have a proven team here and a proven income stream, because these were operating before they were purchased. It's a big part of the reason I'm a lot more comfortable now. Would I much rather not pay the fee at all? Of course, or have them buy at such deep discounts that I'm making money on that front end. Obviously, both of those would be better, and it's part of why um, I'm really excited about buying the discounted tokens on Lofty, right? Because you're getting that discount and buying into properties that you already know what's going on with them. But for my long term holds and deals that look a lot more like a real estate investment, I think this platform makes a lot of sense. Like it looks like a passive real estate investment too, right? I'm just letting them do their thing. uh, you know, they're they're not. Um, Most of my revenue is coming from, most of the return is coming from the cash on cash returns, not so much from the sale at the end of the. They do have a good growth rate and whatnot, but the bulk of the return is coming from the cash on cash return, and so that's why the valuation for me is yes, I don't want to pay more than I think the property is worth. And so like if you watch my video on the Johnson 2, I think it is that one I couldn't get close to their value, and so I decided to pass on that one. um if and all of those, you can find all of those in the playlist for Mogul on my channel. So if you go to my channel, you go to the Mogul playlist, you'll see everything. That's why one of the reasons I'm not going to dig into the market on this one is because you can look at the Mafee video, and I already talk about this market. This is very, it's in the Decatur, Georgia area, just like this one. So really just going to give you some high level thought, other than like we just went into the valuation, on the third party sites, and like I said, I mean, I feel like they're paying a pretty fair price considering they're getting an operating property. I checked out the uh, what is this? The flood map. I didn't see any issues with that. I tried to look on Pad Split, and some of the other ones I've actually been able to find the Pad Split listing, but on this one I couldn't find a specific listing for this property. I looked at several that were close. I took the 174. This was one of the lowest ones I could find. And if so okay, we have 8 bedrooms. Let me see. Just to try to see like how close are we in value to, or in their projections? Like, do they make a lot of sense? So 174, multiply that by 52 because that's a weekly price. Multiply that by 8 bedrooms, and you have $72,000 in like gross potential rent, right? And so then, okay, add some vacancy to that, um, and they're $50,000 pre fees. Seems really reasonable, right? It seems like they are being conservative in that projection. Just based on the limited data I can find. Oh, I actually didn't notice this 161 before. This isn't too far away. It just didn't show up on, I wasn't dragging it around too far. What if we did 160? How bad is that? It's 160 times 52 times 8, and it's still 66,000, right? So we're still above, um, significantly above the 50 that they're projecting. Even if you did 10%, yeah, you'd still be over, if you took off 10%, you'd still be at like 59.4 or something like that. So this made me feel pretty good about it. Obviously it's something that if you're concerned, you want to dig in a whole lot more. Having the 15 months of actuals, makes me feel pretty good, especially because we're assuming a revenue that's lower than what those are, right? If we were gonna try to assume we're hitting those numbers exactly, I'd be a little, I'd want to scrutinize it a little bit more. And if we were assuming that we were going to outperform in year one, then I'd really want to dig into that. The only other thing I want to look at on this one, it is there's a couple of reasons I think this one works really well. One, this is a bus stop right here. We've talked about quite a bit on some of the other pad split listings that when people are renting by the room, a lot of them are doing it because it's the lowest cost housing, and so they don't necessarily they can't all afford a car. I'm always looking for where's the nearest bus stop. Having one that's literally right in front of the house is amazing. Um, Speaking of cars, though, parking is also another major issue with these. It doesn't look like there's street parking on either streets, even though this is a corner lot. I don't think that usually the corner lots are desirable because you have a lot of street parking, but it didn't look like either of these streets that was possible. It worried me a little bit, but when I look at the actual driveway, oh, there is you can see there's definitely it appears people are parking over here. This is one of the things that Pad Split does a lot on there. They're just like, yeah, sometimes we put gravel off to the side of it, but really, like, as long as people can pull in and then drive onto there, yeah, it's not ideal, but it's clearly working so far here, and I think that to do an upgrade and put some gravel to widen that driveway wouldn't be a big deal. But it seems like they're already doing fine with their parking. But yeah, see, you can see the bus stop right here. It would be ideal if one of these streets you could actually park on this side, on the side of the road as well. Doesn't seem like that's the case, but it's a perfectly large lot. So if in the future this became more of an issue, if you had less people riding the bus that were your tenants, um, then fine. It costs a little bit of money to expand the driveway, but there's plenty of room to do it. So, that's those two things are often a big part of my concern when you think about like the exterior of the property. Um, I went through the pictures because there wasn't really much else, to go off of. I know they do an inspection on every property. I know they typically try to get repair credits or cash whenever anything comes up. Obviously, again, I mean, over time, I'm just starting to trust them a bit more, and so far haven't been disappointed. But I'm not putting a ton of money on any of these deals yet. It's still a very small percent of my net worth, and I think that until you feel comfortable with them and you've really decided that they're putting out deals that you're happy with and they're running them the way they are. I mean, really, until they start to have exits, which is very far down the road, it's going to be tough to be completely certain, right? Um, that is one of the downsides to some of these platforms that don't have sort of a secondary market is you'll never know exactly how you did until the property is completely it's sold in real life, right? But let's say this operates for a while, you get your yield for a while, they actually execute the cash out refinance. At that point, if it lowers the price or lowers the payment, so or keeps it the same. So either you get a little bit more return from the cash out, or you get that and you get a higher cash on cash because the interest rates have gone down. If that happens, well, then at that point, I think I'll be super confident in what they're doing. But at the moment, all I can really judge them on is one, how well are they picking properties? And two, are the properties that I've bought so far, are they performing as well as expected? And they have, I haven't had any. I did an update video a couple weeks ago, maybe not even that far ago, maybe just a week ago, about what I'm getting paid so far on the ones that I've bought. They've all done pretty well. All of them are exceeding my expectations and what they've, said they're going to do. Hopefully, they just keep being conservative like that, keep putting out deals that make sense, and over time, I'll just start buying more and more of each one. Um, at no point, even though I say like I trust them, there's not ever going to be a point where I'm not doing some due diligence off of their platform, right? Like I'm not just going to look at this, say, what's the property look like? What do they say it's going to do? Because everybody makes mistakes, and they might just have different outlook on certain markets than me. They might have, I might be able to notice something that they didn't. The Austin market one. It really seems to me like they're overpaying for the Johnson too. Maybe they come back and get a lower price on that later down the road after their appraisal. It's tough to know, but over time, like I said, I mean, it is. I am going to pick up some of this one. I'm not going to wait for their analysis tab. Well, let's see if they put it out yet. Um, yeah, see, they still don't have it out, and I expect that because they don't actually have this property listed on their properties page yet either. If you do want to find it, I think I mentioned this already, but it's in. Or I posted a link in your Discord. If you're not a member of the Discord, just click on the description of this video. There's a Discord link there. There's also links to all the places where I'm currently invested. Don't just buy stuff on there because I am. You want to do your own due diligence on those platforms and on the properties themselves. Um, let's see. I don't think I said please like and subscribe, so please do that. I've been really happy with how many new people have been joining our community lately. Lots of great comments from people, but more people reaching out, either joining the Discord or just reaching out to me directly. I think we're actually, our little group has made a big difference on some of the deals that we've worked together on Lofty, as far as like just trying to change managers and whatnot. And I have enjoyed a lot of the conversations I've had with people that are investing on Mogul. Just some additional insight into properties and strategies, and please do feel free to join the group. It's not a sales funnel. I'm not trying to sell you anything. If you come in there, every once in a while I will post some of my videos, so it is. But I don't spam the videos in there or anything like that. It's really just intended to, a place for somebody like me to make friends with other people that are doing the same thing that I'm doing, and hopefully we can all, when appropriate, all work together to put some pressure on platforms to fix issues that we don't really like and whatnot. So I think that it is. It's just really an attempt to create some sort of community because we're very early in this industry, and I think that it's at the moment it's really shown that we have an ability to sort of you know edge different platforms in a little bit of one direction or another. Some of them are great about listening to our feedback, and some are not. But it's fun to be involved in that, and hopefully make it so we're getting even better deals in the long run, and things work out. So in any case, that's it. That's all I've got for today. Until next time, I'm going to keep making mistakes so that you don't have to.